Hello traders, today I want us to talk about liquidity and types of liquidity. What is the meaning of liquidity? In the smart money concept, the SMC, liquidity represents areas where institutional traders expect clusters of retail orders, both buy and sell, to be sitting. These areas act like magnets for price. They are predictable zones where beginner traders who follow traditional strategies are most likely to make mistakes. And what do I mean when I say traditional strategies? Traditional strategies are those technical strategies that most of the beginners are taught, and these are those strategies that when we all started trading, most of us we came across them. And for example, they are those let's say maybe those who use patterns. Those are the examples of traditional strategies, the support and resistance. Those who try to use indicators in their trading, those are the traditional strategies. So we will talk about the types of liquidity, and we have four types of liquidity, mainly four types of liquidity. There are so many types of liquidity, but I want us to focus on four main types of liquidity. To make it simple, liquidity is any high or low that you can see on the charts. In retail trading, we are taught to place stop losses above highs or below lows. But here is the truth. That's exactly where the smart money is looking. So liquidity is equals to stop losses. And big players need liquidity to enter massive positions without causing huge price slippage. They push price into liquidity zones, trigger retail stops, then reverse the market to the intended direction. So in simple, those stop losses or those zones where we put our stop losses is where the market always want to try and to come into those areas, take those stop losses before going into the intended direction. And that happens when you don't identify correct liquidity zones or your correct point of interest. Some of the common forms of liquidity include: number one, we have equal highs or equal lows, often seen as resistance or support. Number two, we have double tops or double bottoms. Number three, we have obvious trend lines. Number four, we have poorly chosen order blocks, especially those with no liquidity above or below them. If you pick the wrong order block without considering the liquidity resting below or the liquidity resting above it, it might not be a point of interest at all. In fact, it may become the liquidity that institutions target. So I will go on to the charts, and then I will show you the equal highs or the equal lows, and I will also show you the double tops and the double bottoms. I will also show you the obvious trend lines and the poorly chosen order blocks. So number one, we had equal highs and equal lows, and on this chart, it is very clearly shown that up here we have the equal highs, and down here we have the equal lows. You can see clearly, despite the market having a break of structure down here, we have this pullback that went up to sweep these equal highs and went back down. So if you mark this as your change of character to the upside, that means you will be buying from down here on this order block, and you will be taken out. So be very, very careful, and don't mark this as your change of character to the upside. This is just a wick that took out all this liquidity above this high, this equal highs, and went back down uh, to clear this low to form a very good break of structure. So equal highs and equal lows attract the price to come back and try to take those liquidity before going into the intended direction. So you can see very clearly, after we had these equal highs and those equal highs were not taken out before price went back down. So price had to come back up to sweep those equal highs before going to the intended direction. The second example, we have double bottoms or double tops. So in this scenario here, I have a double bottom example. The double bottom simply looks like a W shaped, and also you can also consider it as an equal lows, because they most of the time you find them having an equal low. So in this case here, we can see that we have the support zone down here, and this support zone, you can see the first touch, the second, the third, the fourth, and a beginner trader will be expecting to have the fifth touch from this side. So you can see very clearly here we have the double bottom, and later on, if you could have been looking for a trade from this area, you will be stopped out. So the market came pushed price down to take out these equal lows or the double bottom that was around this area to take the liquidity. And you can see how some, let's say maybe if a trader took some buys from this area expecting to buy from this area, so you can see very clearly that the person was stopped out. So this is a very good example of a double bottom. I don't have an example of a double top, but it is exactly the opposite of this double bottom. So that is number two, equal highs and equal, sorry, the double bottoms and the double tops. Number three, we have trend line liquidity. Here I have a very clear example. We have this trend line. We have the first touch, second, third, fourth, and fifth touch, and immediately the trend line was broken. You can see the retest to this trend line, and then that now tells us that clearly the buy side liquidity is going to be taken out. This swing high is going to be taken out. So you can see how, if you understand liquidity and you understand trend line liquidity, you can catch this kind of trade. So when too many traders rely on the same trend line, it becomes a highly visible area of liquidity. And always be cautious of clean trend lines. If they look too perfect, they are likely being used as a trap. Number four, we have poorly chosen order blocks. And in this example, I have a very good example of a poorly chosen order block. And on this side, we had this low sweeping this liquidity, the inducement on this other side, and then went up to break structure. So this is a valid break of structure. And if this low is cleared out, we have the change of character. So you can see here it is a change of character, but this happened in the lower time frame, so that is why I've marked this as a change of character. And the low has the strong low has clearly been taken out. So if you had marked this as an order block and expect some buys from this order block, you can see clearly that the order block does not have any liquidity above it, and there is no any sweep of liquidity on the other side from the origin of the order block. And if you had marked this as your break of structure, you could have been taking trades from this type of order block. So if it is very important for you to learn on how to identify your valid break of structures. And you can see clearly the market tapped into the order block that was up here, that changed character to the downside in the lower time frame, and you can see the kind of reaction. So if you were trying to take trades from this kind of order block, you could have been stopped out by your stop loss. So you can see the reaction to lie. The market tried to lie to traders that is willing to go up, and later on the traders were stopped out in this area. So you can see how important identifying very good order blocks in a very good situation, it is very, very important. So we have also other types of liquidity that are very complex, and these are the internal structures liquidity and the external structures liquidity. But for now, let us try to understand these four types of liquidity. So if you like this video, kindly share, comment, and don't forget to subscribe.